What's up, everybody? So, welcome back. Today, I want to talk about leap options, and it's just basically a great way to, if you're bullish on a stock, but you don't want to pay as much for the stock, and also don't really allow for greater, just massive returns, then you can try, something called a leap option. Okay, so the leap option, just to give you an idea of how it works and is basically you're buying a call option, but you're buying a call option that expires as way out as you can. Okay, so sometimes people buy call options that are more short term, and in my opinion, those are a little more risky because of simply the fact that your option can decay, and if you don't allow it enough time to go up, then that option may expire worthless. Okay, so before I begin and before I continue, if you do like my content, all I ask is that you like this video and you subscribe, give it some love. This really helps the channel. Okay, so without further ado, the way leap options work is first you want to find a company that you are bullish on. Okay, so a company that you can take a look at their fundamentals, you can take a look at their just a lot of different stock earnings. You can take a look at what people were saying about it. A lot of different indicators. Obviously, you can take a look through stock screeners and all that. But if you're bullish on a company and you don't want to buy the stock outright, you can do something called a leap option. So I'm going to take an example of stock ticker PLTR, Palantir, because it's actually a company that I'm looking into buying a leap option probably by next week. Okay, so Palantir is a company that is, well, we'll talk about the company and what it is later on, but let me show you how a leap option works first. Okay, so right now Palantir is trading at $26.69. Okay, if I want to buy 100 shares of Palantir, it would cost me almost $2,700, right? $2,670, $2,670. Right, but instead of buying outright 100 shares, what I can do is buy a leap option. So what I would do is I would go into my brokerage account, and one thing to note is I'm using Robinhood just as an example. I don't really trade most of the time on Robinhood, but Robinhood actually has a really great interface. They made it so easy, perhaps a little too easy for everyday people like you and I to not only trade stocks, but to look at options and look at all the different, the deltas and all that, and a lot of other helpful information that, most people just typically won't even bother to take a look at if they're using another platform. But so I'm using Robinhood today, and what I'm going to do is I'm going to set my expiration date first. You always want to do that. I've made the mistake of not setting the expiration date, and that's just a big mistake you don't want to do. So you want to set the expiration date, and I'm going to go way out. Okay, so I'm going to go all the way out to January 2023, the farthest out I can go. And this just really allows Palantir plenty of time to go up. Right? Yes, the premium is going to be more expensive, but in my opinion, it just gives a lot more time for the stock to come into fruition. And on top of that, too, you can definitely still sell your call option whenever. Right? You don't have to wait till 2023. That's just something that I prefer to allow more time for this play to come to fruition. Okay, so I'm gonna buy a call option, and I'm gonna go deep into the money. Okay, so yes, you can buy stocks up here where you're betting that the stock will go. Well, okay, so let me explain what a call option is, right? So one call option is basically one contract that allows you to buy 100 shares at a later price. At a later date on a set strike price. So, for example, yes, you can buy a call option of a Palantir for at $35 on January 2023, and you would pay a premium of $418. Right. So on January 2023, you can buy 100 shares of Palantir for $35, and right now you would have to pay 418. So if the stock goes up above $35, then you would be making a profit. Okay, well, that would actually be, a little more than that, because you have to take into account the premium you paid as well. Okay, so I'm gonna, go deep into the money, because I think it's just a much safer play, and that's essentially what a leap option is. As you buy deep into the money, and then you want to take a look at the delta. Okay, so the delta just tells you how closely this option will mimic the price change of the stock. So let's say, for example, if you buy a Palantir option with a delta of 0.96, for every dollar that Palantir goes up, this stock option is going to move up 0.96, so 96 cents as well. Okay, and the reason why you want to have a delta that is close to 1, and one that just mimics the stock movement pretty closely, is because it gives you just the option of selling covered calls later on. I just think it's a pretty good way to earn some income if you're essentially buying a stock option that mimics, it's almost like you're having 100 shares of the stock. Okay, so I'm taking a look at, for January 2023, a strike price of, I think maybe, most likely probably just $15. Okay, 15 or maybe 12.5. Okay, so yeah, so the delta is 0.92. So today I'm gonna have to pay a premium of $1,500, but that essentially will pay off if the stock goes up a couple percentages. Okay, so that's essentially how a leap option works. So you buy a call option with a long expiration, deep into the money, and okay, so Palantir is just one of the companies I'm taking a look at. The other two companies I'm going to be probably buying, or at least heavily considering buying, is Sumo. Okay, so before I talk about Sumo, I forgot to talk about Palantir. So Palantir is an American software company that specializes in big data analytics. It's headquartered in Denver, Colorado. It's founded by Peter Thiel, so just a really huge investor in PayPal and all these big companies. Stephen Cohen, so it's backed by a lot of really big time entrepreneurs who started just huge companies. And on top of that, what I like about Palantir is they have a huge amount of government contracts. There's just so much in the pipeline for it. Kathy Wood has been invested heavily into it, and so I think it's really going to go up. And then Sumo stock, another company, cloud-based machine data analytics. It was founded in 2010. They have 800 employees. A lot of great things in the pipeline for Sumo. They've actually been down the last couple of months, so I think this is a great buying opportunity, especially for leap options. And the last company that I'm taking a look at, this is a lot more risky because it's a biotechnology company. With these, there's not a lot of revenue, and you just kind of have to hope that whatever they're developing comes into just passes the FDA approval and all that. But I do think is it Atheris Inc. ATHS. I think they have a lot of great products in the pipeline as well. Therapies that are really designed to enhance the quality of human life. And I'm all about that, right? I really believe in furthering humankind, especially by researching and finding just really important therapies for diseases and all these things are going on in the world. So, but on top of that, you also want to make sure you do look at some of the fundamentals. And I think a lot of people are saying that this company has just a lot of great things in their near term future, or in their long term future, really. And so that's something I'm taking a look at. The stock is pretty cheap right now, at $1.68. And but again, this really just covers briefly over what leap options are and a couple of companies I'm taking a look at. I think there are actually quite a few other companies, honestly, prospecting for leap options, but these are just initially the first three that I'm going to take a look at. Okay, I hope that's helpful for you. If you like this content, again, please give me a like and subscribe. And until next time, I will see you then.